I'm Arthur Halleran. I'm the CEO of Trillion Energy with projects in Turkey.
All right, good to see you. Been a while. I think we saw you last, August last year. I guess a lot of confusion in the marketplace. People are wondering, like, what are you guys up to? You know, what's happening with SASB? What's happening with all the other projects? There was a kind of hiatus, it seems. So, what do we need to know?
Yes, I mean, it's true. I've been quite quiet because I've had the misfortune of over-promising and under-delivering. And so what we've done is we had the 6 gas wells. So we had 6 successes for 6 activities, but we've had some water loading, which is a normal process. So our production has been not stable and not as high as it should be. So we started around September, October, getting some engineering, some third-party engineering done, and to execute artificial lift to pump the water off, because the gas is not lost. Like right now, some of the investors are saying the gas is gone and so on. It's just there, just the weight of the water on the perfs. And we now have the plan, and we are actually right now in the process of executing the artificial lift. And what that'll do is that will allow the wells to produce, I say about 2 to 2.5 million cubic feet per day for like 2 or 3 years per well. And right now we have 6 wells.
Okay, so what's the problem you're trying to fix? Like, you've explained some sort of technical rationale for why you didn't hit guidance there. I'm interested in how you fix it. You talked about six wells. We can do the math on that one. Does that kind of get us back to where we should be? Do we play catch up? I mean, why do we trust the companies to actually be able to kind of deliver now?
Yeah, so it is kind of like catch up for sure. And because if you remember, there's been 2 sets of drilling, 2007, 2011. Each one's about 6 wells. So we know exactly how they should produce. And the 6 that we've done are actually slightly better, but they're still within the same range of reservoirs and so on. And so all that really happened was because they're longer extensions, longer reach wells. And we used, if you can imagine, like a straw. Instead of a small straw, like 2.5 inches in diameter, we had a 4.5-inch diameter straw, and just a normal production of water, not much water, loads up into that tubing, the 4.5, and the weight then just pushes the gas back into the formation, and it doesn't produce as well as it should. So if you remove that weight, we'll be back up to what historically the analogs say it should be. And that will generate a lot of cash. Like each one, we're still getting about $11 US on MCF. And so if you look at it, every 2.5 million, run it off to $10. Every 2.5 million, that will give you about a couple of $1 million a month.
Right. Okay. If you don't mind, I'm going to go back a bit, because I want to be sort of clear about what the company's focus is. So you've got assets offshore, onshore. Obviously, the issues you've experienced, and we've talked about the high cost of the offshore wells and partners, and all the kind of there's a lot of variables out there. We're not giving up on that. We're getting after that. It will work. We're not distracted by the onshore stuff. I mean, is that the gist of it, or are we trying to run all of the above all the time?
Yeah, you're exactly correct. And the reason is because we found the reserves, we have the wells, and in the onshore, you're talking about like the oil block, and that's exploration, and it could be a big hitter, but we need to focus and spend our time and attention on SASB, right? Because that's where we already invested a lot of money, and the gas is there, and it's just to monetize that asset into cash.
Right. And the idea there is to run that as some sort of annuity stream of cash flow for yourselves, for your own use. You're not looking for some kind of exit to partners or new buyers. Is that the plan?
Yeah, again, that's correct. Like, so for SASB, We are 49%. TPAO, the Turkish Petroleum Company, is the other 51. The oil block, again, we farmed in, but if we could get somebody to take our costs to earn some of our interest, we would do that, because we've already found the reserves in SASB, right? And then so for these six locations that we've already got, by the second quarter, we should be up to 100% production, about 15 million cubic feet per day, because 2.5 million cubic feet per day times 6 is, 15. And but we also found with the artificial lift, we were always talking about the next phase. We would then do like 5 or 6 sidetracks, which is just re-entering some of the old boreholes, milling a window out, and then accessing a new reservoir, because there's some reserve left behind. And it turns out that when we look at the artificial lift for the wells were already drilled, we realized they never did it in the historic wells. And so instead of drilling a $10 million sidetrack, we can go in for 500,000 or 700,000 and do artificial lift. And then we don't have to worry about saying, well, let's get 2.5 or 3 million to pay the capex back, because that's, 10 million, 8 million versus 500,000. But I would suspect you're still going to get a couple of million cubic feet per day. And the other thing, again, I must mention is that the first 6 I'm talking about, and these sidetracks and everything, those are reserves. They're not like exploration or resource. These are actually reserves that are booked.
What, you raised some money back in November.
Yep,
just over 11 million bucks.
Yep.
Is that enough to get these, get cash flowing?
That's correct.
Will you be coming? Right. Okay.
Yeah.
So will you need to come back to market, dilute?
Yeah. And that's where the distinction has to be made, is that, again, the investors that put the money in and so on said, we want you to conserve cash. We want you to be really good custodians of the cash, and we want that in SASB. And that's where we're going. So we have enough to already purchase, like we've already purchased some of a lot of it, and it just on the way here, right? So some of it's already in Turkey, some has to come from like China and so on, and it'll be here like March 15th. But those are pretty well paid for. This discretionary capex is the oil block. And so that's what I mean is we have to focus on SASB. There's no use having our oil exploration half done and then our SASB half done, and then you end up with nothing, right?
Yeah. I'm kind of excited about what you're doing with the oil blocks, because there's some pretty big oil fields around you. But as you say, first things first, let's get into some kind of cash flowing situation here. So there's a little bit of damage control that you're having to do with your shareholders, because they were a bit confused about what was going on. So your message to them is what? Give us 9 months, give us 12 months, and we're back on track, or what?
Yeah, because when I first started it in September, I thought, you have an artificial lift and you look at a PCP pump or an ESP pump, and it turns out that I'm a geologist, not an engineer, because you have these long-reach, extensionally drilled wells and you got 2 S-curves, you end up having a problem. You can't put the ESP pump down below the perfs, and the PCP pump is at the heel. And then you have issues like you pump all the water off and you start getting airlocking. And so the idea was, let's do this correctly. And the biggest issue was to modify the wellhead so that if we do the PCP pump and we find out that, we get good production for 6 or 8 or 9 months, but the ESP gives us a lot more, we don't have to modify the wellhead or buy a new one. We can just interchange the pumps. And the other thing we're doing very cheaply is a velocity string. And what that basically is, you're just putting a tube in, and one end of the tube is at the perfs and the other end of the tube is at the top. And the pressure difference causes the gas to go in, and it increases the velocity and pushes the water out. And those are like $80,000. So that's, again, when you talk about the capex, the most expensive thing is an ESP pump, and everything together is about $450. We pay half that, so that's about $250. And the other thing I mentioned before is that I said we're going to perforate all the zones, and I was told all the zones were perforated, but now they've gone back and they say no, we have more zones that we can perforate, because if we can handle excess water, let's just perforate all the zones and get more production. So that's going to happen in the first quarter. So we get that flush production. But like I've always said, that is a short-term fix. The long-term is the pumps.
Okay. Increase production. Talk to me about the market and talk to me about when we first started talking, it was a very high, well, not only cost environment, but your high price environment for selling locally. I mean, what's the sort of net back that you're hoping to achieve now? Has it changed much since we first spoke?
No, it hasn't. We've actually had the same $11, $26, $12. The change is a bit to do with the Turkish lira for like 4 or 5 months now, and it's been about the same. And I think it's because everybody here is used to it. And before BOTAS, the government marketing company, had a big overhang, a big debt from subsidizing the residential stuff during the really high price time. So it really hasn't changed much. And the outlook is that it's not going to change much. So we're getting, $11, $10 an MCF, and our OPEX is $90,000 US a month. It's a set fee, so we just pay that. So we produce 1 million cubic feet per day versus 10 million cubic feet per day. We just divide that into $90,000.
Right. Okay. So you're making good margin there. Fine. Okay. When do you get to the point? Because you talked about the onshore, the oil blocks, etc. When do you feel comfortable that you've done enough, said enough to the market, and either can have revenue or can see revenue before you make a decision on the onshore oil blocks? Because they look potentially massive, but you don't want to get distracted. Your shareholders have told you, the last round of investors said, stay focused on here, but what's the timing on that?
Yeah, we've already shot the seismic on the eastern block and the northeastern corner of the block. Like, there's never been any seismic there. There's never been any wells drilled there. And when you see the terrain, it's for a good reason, because it's very uppy, downy. And so they had to drill 30-meter holes and then use actual dynamite. And so we actually have that seismic. So we've gone down that avenue already. But due to the weather and so on, it's now, the rest is delayed until, it's not delayed, it's normal, until April. And so at that time is when we started having to come up with like $1 million, $2 million to continue with the program. But we should already starting to get some good return from the SASB. And the other aspect of it is this first initial stuff. Hopefully we can use that to really get somebody interested to, give us a promote on our part of the farming.
Right. And the reason I ask is because I think you talk in your material about a work program of about $27 million. Obviously, you don't have $27 million today. So the question is, how does that get financed? Is it a case of we'll get the gas flowing, SASB revenues in, and we will self-fund, or do you partner up? And if so, at what point do you partner up? And what's your expectation of how you allocate the capital? How does the capital allocation work, etc. So because small companies trying to do big, programs like this, you've got to have a plan to navigate your way through. And either you do it in a linear fashion or you get creative. So how are you thinking about that?
Yeah, as you know, capital is always scarce, and you always have more projects than you can invest in. And so one of the other things that we're actively looking at, and again, this is predominantly to continue with SASB, is because gas is the choice of energy in Turkey, and it's a seller's market. We have about 4 or 5 groups that we've contacted through a intermediate here. They would like to, the idea is you get a loan, but it's not really a loan. What they do is they pre-buy your gas and then they market the gas. We get the regular BOTAS price, so we're not being penalized. We might have to give a 1 or 2% discount type thing. But what they do is they like to play the spot market, and the spot market is, a little bit more. So an example would be we go and we get $10 million and we say, okay, this $10 million we can use to increase the production, because we're still talking about reserves here, and they like that. And they can see that their money is being used to increase the production and their reserves. And then potentially we could get, 20 million or 30 million. And then when you go back to the oil block, the whole reason why we wanted to get the seismic in that one corner is because, like you say, you got those huge fields. One is, they say, is 1 billion barrels. The other one is 250 million. What you know for a fact is one of them is already producing 30,000 barrels of light oil, about 1,200 barrels of oil per day per well. And that trend runs right through our block. And so we shot the seismic, and we have the same reservoir, the same source rock, and it's just like an anticlinal type structure. Oh, we already got the seismic now, and we're processing the seismic, and then use that to find a partner, like somebody to come in. The large 500 million barrel fields are along the anticline where you have a saddle, right? And then the 100 million to 50 million is where you have a small fault block and you have a porous carbonate up against a tight shale, and you get the stratigraphic fault-related deposit there. And there's many fields around that have all these analogs. So it's, and also TPAO actually has licensed wells along trend from their main field. One is about 300 meters from the border, and then you can follow the trend, and they have another location on the other side of our block. And the other really good thing about the oil is that they're right now trucking the 30,000 barrels of oil per day, because there's a refinery about 130 kilometers away. So you can make a small tank farm, and then you can start trucking it. And they're using 200 barrel trucks. So it's not like I worked in Africa, we find like 20 million barrels of oil, and then it's like 6 years before we can get any of it to market, because there's a pipeline you got to build. And here you can get cash flow pretty quick. And they're going to run a pipeline through to the refinery, and it's basically going through our first block there. But then as you know, the minute you find a discovery, especially like in this type of oil, that's when you start needing the big dollars, because then you're not drilling at one exploration well, you're now going to be drilling 20 or 30 developments, and you have a tank farm and so on. But by that time, our shares should be a lot higher. And then if you do an equity raise, it's substantially less dilution, because you're talking, $4 or $5 a share.
Yeah, no, I hear what you say, but that, and that's okay. That's the nature of the beast. But these fields are, well, certainly the fields around you. If you look at West Raman, and Kedil, etc. These are huge fields which will require balance sheets. And hopefully you make a lot of money and go on a nice run. But even you, in terms of managing and planning development of those fields, it will require a partner, presumably. And I guess that's what I'm excited about for you. But before we kind of get ahead of ourselves, I mean, the matter of playing catch up on the gas is really important. So I asked you a question earlier, which I'm not quite sure I got the answer for. If you did, I've kind of momentarily forgotten. It's like, I'm trying to work out what the net back is, because I know the royalties in Turkey are quite good, like 12.5%, and even the corporate tax at whatever it is, 22.5%. It's good. You'll make money, but can you give me sort of net back figure so I can do some basic math in my head?
Yeah, you're talking like for the oil or for the gas?
For the gas. Sorry,
So for the gas,
gas.
So all in all, with the royalty and so on, you're paying about $2.50, right? Of course, that depends on the revenue. So you net back, pretty close to $8. The actual OPEX is a lot less, but we pay 12.5% royalty, right?
Yeah. Okay, interesting times. Well, I guess all I wanted to, one, thanks for coming on, so I appreciate it. I've enjoyed the conversations we've had in the past because it kind of feels like the potential's there. But obviously, it came off the rails a bit, and I wanted to get a sense of, are we back on track? Sounds like you are. You're able to raise money in a difficult market at the end of last year because people presumably believe that you can get this thing over the line. So 2024, very, very important year for you. I'm also quite keen to sort of see that you kind of do focus and do, get stuck in to the gas component and get that revenue flowing. Your hopes for this year, what I think you've described everything you think is important for me to be looking at. Is anything you haven't said?
Yeah, I would say that, the conversation is we drilled the wells that nobody said we could drill. We found the reserves that people said weren't really there, right? And so we have that. So we have this asset. And so we were producing, but we have a challenge. And so we need to, and we're doing it to execute the program to solve that challenge. So the 6 wells I want running and producing at about, net to us, 7.5 million, 100% about 15 million cubic feet per day, which is very doable. And I want that pretty well by the second, third quarter. And so that production will be for 2 to 3 years. But then I want to shingle on another 6 or 5 of the sidetracks or other locations in there to add another, 10, 12 million cubic feet per day so that we can actually, with these ones we get 15. So exit 2024 with, say, net to us 12 million cubic feet per day or about 24, 25 million cubic feet per day for the whole field. And then at the same time, it would be great if we had a partner for the oil block and we had the data, and that would be ideal.
Okay. I guess, like I say, I think the kind of important takeaway for me is to believe that you will not be going and raising money, diluting shareholders anytime soon, and you believe that you can get the gas into production, that you do seek a strategic partner on the oil. I think that's really important for people to kind of understand, and I guess important for us to see as things progress this year. So I appreciate time today, and appreciate the honesty about what's happened. I just got to go and do it, right? The easy bit.
That's right. Yeah. So thanks a lot for, like I always say, if it was really easy, gas would be so cheap because there would be no problems, right? So thanks for allowing me to have this update and, let people know what's going on.